CTXR stock Citius Pharmaceuticals. So this is a COVID list, a COVID stock for the COVID playlist. If you want to go check out these kind of stocks. And so these guys have been developing some stem cells, and they just got FDA approval for the fast track, and they have stem cells for ARDS, which is the respiratory distress syndrome. Yeah, so stem cells for the respiratory stuff. Um, so no like medical advances here, but this is an FDA like news blast that they're allowed to, fast track. So yeah, so the fast track from the FDA is to you're allowed to expedite your procedure through the FDA process and testing and approval and things like that. And usually to get a fast track, you need to prove that you have superior effectiveness in your drug or way superior safety results very early to where they can try to move faster. But in the case of COVID-19, it is just that you have to be related to COVID and you can just kind of get fast tracked as long as your drug doesn't look like awful immediately. But here's the chart. Let's take a look at this. This is a micro cap pharma, $1.50, something like this. And so this is the first big blast that has been. Let's take a look. It's been kind of following. Let me get out farther. It's been following the general trend of the market so far. So not not super pretty kind of bearish descending chart down into here. But this area is where we got the rip. So if you kind of discount the rip and you just draw the recent action, it's been a roughly bullish trend since before we got the big liquidation rip. It looks like basically a bullish chart. And so I like the chart on this one. And then as normal with these kinds of news blasts, you look for it to, most often when it comes into day trading territory, it's going to just do kind of a reversal. And in this case, we have a general uptrend with a lot of increasing floors. So probably put the target, above this whole consolidation range, somewhere like down here, this area, wherever that is. $1.11. Not investment advice, but that's the buy price that I would expect to be looking for a long on this stock. And this could be an interesting one. We're already getting a little bullish trend here, and we may actually see a trend line starting to form here. And so if we come down into this range off of this news blast, this could be a potential buy area to trade along an increasing bull support line here. Let me draw a better line than that. Let me do a line from kind of back here and try to get the angle of this thing and ignore the huge liquidation. Yeah, so something like that as sort of a trend line. And it could get a lot steeper than that if this drug is now fast tracked on the on the COVID list. So we probably won't see the exact angle of a bullish trend line if it gets one like one of the crazy stocks, like mRNA has kind of been on its own little world. But yes, so if it reverses down into this whole general area here, there's a good potential for it to kind of run out, on a good trend line. And if it pops, for day trading kind of stuff or swing trading, it's an interesting one to hang on to. And then if it pops, you can kind of trade in and out of it as it does crazy stuff. And then of course watch for it to break down underneath underneath a trend line. If you start getting a bullish trend line, you need to have stops and everything set up to catch if it breaks down under there. But I think this stock has a decent chance to get a bullish trend line, and it's cheap. It's $1 or something, and it has traded as far as what, $4 or $5. So this is the kind of stock that, you know, these smaller stocks can get way bigger volatility in their swings. And yeah, so this could be a fun one to day trade. And I think this is the first serious news blast that we've gotten on this guy, but you know, the other news blasts have kind of settled back down, or the other peaks here, I'm sorry. But we're getting a little bullish line. So I think this one might get a bullish line and maybe a fun one for day trading. CTXR. So I'll put this on. Yeah, this will just go on the COVID playlist. So you can go in there and check out. There's quite a few stocks in there that have similar kind of trading charts. And a lot of them have a bullish chart that's kind of fun to day trade or swing trade in there. And the S&P, now I'll just kind of quickly review what's happening now is the Fed balance sheet just posted again, and it's down. And so we're getting no liquidity from the Fed from the last 3 weeks. The balance sheet is dead flat or even down over the last 3 weeks. So the whole QE infinity Fed's blowing the market thing is not happening right now, not for 3 weeks. And this peak over here has lined up with exactly when they stopped pumping. And you know, they could start again, but as of right now they're not doing it. And so that is a liquidity kind of down pressure on the market, along with the Treasury general account is still going up at a pretty steep rate. And so that the Treasury account going up means they're taking liquidity out of the market and holding it until they decide to spend it into the economy, at which point it would be like inflationary kind of helicopter money. And they have 1.6 trillion just sitting in the Treasury account. That's the most by far they've ever had. And that money could go into the economy in a hurry if they decide to do that, which is something to watch out for. But as for right now, the Fed is decreasing liquidity from their end. The Treasury is also taking liquidity out of the market. And foreign trading has been kind of back and forth. But yeah, if we get a big outflow of foreign trading, that would signal sort of a real down move. But as for right now, it's just some tight liquidity and a little bit of bearish momentum on the charts. I flipped through it in my last video, but right now we have bearish momentum as of today, and this is the first real momentum we've had in a while. Like the momentum was dead through this whole period, and now we're just flipping to bearish momentum. So I think that we could actually get a bearish move with a little bit of follow through on this. Let's zoom in closer and see what it looks like. So I think that we just got a basic flat, well, not a basic flat, an expanded flat reversal. So we got, you know, we got our wave down here, and then we got the bearish kind of flat setup where you get the 1 2 3 1 2 3 like a little mountain, and the bottom is lower than the beginning, so that's an expanded flat, and so you expect the wave to be higher. So that's what I drew yesterday as just kind of the 5-wave up. It should be above the flat, and we did that, and then I started seeing it flagging out. And when it started flagging out, I'm like, okay, well, the farther this thing flags, the less bearish it's going to be. Like if it's going to do a bearish flat continuation, it needs to do it like right now. But this trading was all off market, and the actual cash trading has ripped. And so I'd look for a 3-wave down here. I think we'll get a bounce and another rip maybe today. That's what it looks like. The momentum and kind of the wave setup looks like we'll get a wave down now, and then I was looking at this as a target, but now this line's getting so close to the momentum line, I'll just circle the whole area as hot. It's a hot area, and every time we've gotten near this this is a 120-day moving average, and I like to use that moving average because it gets closer to the chart than like a 50-week or something like that. It's helpful, but it's not like right on the action. Like this one hugs the action quite a lot, and I mean you can see the action that it's gotten across this line recently has been nutty. Like it's been really reacting and swinging off this thing, bouncing off it, breaking it. And if we get down here, that's what I expect to see again, more crazy stuff. And basically the bulls want to bounce either off of it, or if you break it, get up, get away from it. And the bears want to get underneath it and backtest it. And if you can backtest and even consolidate or something like that underneath the moving average, that would be really bearish. So that's the thing to look out for today is if we can get down into the crazy zone, and then if we get rejected real hard to the upside, or if we can break it and get underneath it and set up a actual bearish kind of continuation, like a actual bearish wave that will last longer than like one day, which we've had very few bearish moves that have lasted even longer than a day. Like I guess this one counts. This is like a real wave that kind of counts, but in the past 3 months, there have been very few bearish moves that lasted longer than a single day. So yeah, that's what we're trying to see now. I think that we are making an actual bearish move with momentum, with restricted liquidity, and with technicals. Technicals are the technicals are setting up a just one bearish wave, and then we just have to see what craziness we get when we get to this zone here. Is there anything else crazy? I mean, the VIX has been kind of a thing I've been checking out a whole lot lately because we've been above a 30 VIX for pretty much this whole period where the Fed tightened the liquidity, and that is a really dangerous high VIX area to be in here. Now you can get really big market moves any given day with that VIX, and it does tend to be a bearish signal to be up here, but it doesn't mean that you're going to get a bearish move. Like if you get a big bullish move from this kind of VIX level, it'll just bring the VIX down usually, and you can get a big move either direction from here. This really just says that you can get a big move. Oh yeah, and the VVIX, I haven't checked that one in a while. Oh, okay, the VVIX is kind of chilling down a little bit more. So if the VVIX is above the VIX, it kind of leads the VIX and tries to pull it up. But now the VVIX is down closer to the moving average. So the VIX and the VVIX are lining up a little bit more. So that's actually less of a bearish signal than it was earlier in the week, as far as the vol of vol has been coming down. And so the volatility of the volatility is like how much the VIX itself is kind of chopping and going around. And it's sort of the downside danger of the market has been decreasing as we've been working our way down, which is interesting and kind of makes sense as we get closer to that moving average, because you get really big support the closer you get to that moving average here. And then, let me just jump way out. Let's take a look at the whole area where we are right now, because I have, well, two things. I mean, I have this is Volmageddon back here, and so we have this huge zone of increasing volatility that looks insane, but I mean, we just ripped all the way across this thing and way back up here just in like 2 months. This is the craziest thing ever. But this isn't the first time we've done a huge crazy vol move across. Like we've done this more than once. We did a huge rip here on Volmageddon. We did this huge rip across the whole zone here on the 2018 crash. And then we've got support. We got this support kind of bull line here on this one. And then back here we have our support that goes all the way back to the financial crisis, the big long-term bull support. So we are in a high volatility area, high volatility on the charts. with basically the ability within a month to like rip all the way to the top or the bottom edge of this zone. Like you can go huge either way. And with the volatility that we have right now, it's completely possible to get a huge wave like either direction. So it's just absolutely crazy. The market's absolutely crazy. And where we are now is we're in between the 2-year support line that we had here and the 12-year support line that we had off the financial crisis. And if we got a big rejection off of this one, so that's a bearish kind of setup, but it's not indicating a bear market unless we can get under this one and back test it and kind of, if we can stay down underneath the financial crisis line, that would be looking like a longer term bear market. But right now we're just kind of in the middle of nowhere, really with the ability to just rip to either of these lines here, like in a day or two. You could easily rip to either of these lines within 1 day or 2 days, and then in a month that you could rip all the way to the edge of this huge zone. And there's plenty of volatility and track record to support that kind of craziness. And so this market's absolutely freaking nuts. And tracking the liquidity has been the best measure of what's going on here. And like the Buffett kind of fundamentals and stuff like that haven't really started taking over this market. But if it does switch into a bear market scenario and the solvency starts hitting companies and they can't get cash flow, they can't pay their loans, all of that sort of stuff starts happening, and companies are going out of business, and the Fed is not just like showering random companies, like every company that goes bankrupt with money, which they're not. Like they're not showering like Hertz with money right now. And and the SEC came in and stopped Hertz from issuing new shares, which I think was a good precedent. So they're not being absolutely insane. Like the Fed's trying to keep the financial system functioning. Now, they're not just like going nuts and just like showering money on random stuff. But it's really important to track the liquidity and where it's going. And so right now, as far as like the Fed's liquidity going through the financial system into stock buybacks, which is what drove like the last 12 years of the bull market, was financial system buyback kind of stuff. And we're still seeing that a bit in the Qs, but that's pretty much all stopped in the other sectors, especially small caps. The financials had almost no buybacks already, and the government just came out yesterday and said that the financials are not allowed to do any more buybacks. They just made it, well, not illegal like a law, but they just mandated that they're not allowed to do it and that they need to cut their dividends, which is interesting. So there's more risk in the financials, and these kind of small caps and financial sectors aren't doing buybacks. As far as the Fed liquidity goes and how it's actually getting into the general stock market. But there's also Fed liquidity going into all kinds of international stuff, and there could be money coming from internationals, and then there's helicopter money coming from the Treasury going to companies, going to individual people that could get into the stock market. So those are the kind of liquidity flows to track. But as of this week, Fed balance sheet's down again, less liquidity from the Fed. Treasury account is up again. That's them taking more money out of the economy and holding it out until they decide to spend it. So less liquidity, and I'm going to be bearish on the liquidity because that's been the best indicator of what direction this thing has been swinging. And for sure, if we see the Fed balance sheet and or the Treasury switch directions, it'll be a huge thing to look out for. But as for right now, that's all pointing at lower liquidity. Anything else interesting here? Has gold moved? Yeah, gold is up, looking for a breakout, and that liquidity, the bearish market movement and the liquidity squeeze, neither of those are good for gold. So I'm not buying this gold breakout. No, I'm not. And if we get a real actual wave down in the stock market, gold will probably sell off with it for a little while, and there might be a good buy spot on gold if that does happen, but I'm not buying this as a breakout for gold, and definitely not buying a breakout in silver, but it's not even trying. So silver has a lot more risk to sell off than gold does. Now, as we saw back here, I mean, silver sold off really hard and took a real long time to try to recover, and gold sold off a little bit and recovered immediately. And so that's what I would expect again. If we got another kind of liquidity thing, gold will come down, silver come down, but silver will keep going down with the market, and gold will bounce a lot faster. I would expect that to happen again. So let's look at the other currencies. I guess Bitcoin. Bitcoin has been selling off with the market as well. So I would expect Bitcoin to come down with the market if it comes down. And so there may be some buy opportunities on things like gold and Bitcoin halfway through or all the way through if we get another wave down on the general stock market. All right, so not investment advice. Check out the playlist, chat some stuff up, subscribe, all that stuff. Yeah, and if you have any questions or any stocks that I haven't covered yet, I've been trying to hit all of these hot stocks that have the weird charts recently, and yeah, let me know what's up, and happy trading.